Okay, well, thank you so much to FinTech House Portugal for the invitation to come and speak today about embedded insurance. So we're still talking about customer satisfaction, but we're on a slightly different topic now. So what I want to talk about is how the battle for retail success is changing quite substantially at the moment. What we're seeing is that the drive for omnichannel success has opened up opportunities to meet the increasing needs of digital-first customers, and brands are focused on creating these immersive experiences. But what we're starting to see is that, perhaps in this fight for customer success, is that we might have forgotten a critical step in the journey, and that is a critical step in the battleground for customer satisfaction. And this is where we come to the delivery and the last mile experience of customers. And actually what we're seeing is that the competition between retailers and marketplaces is no longer being fought between companies, but it's being fought between supply chains. We've just found some very interesting data recently, which suggests that 33% of online customers have experienced some sort of a parcel delivery issue over the last 12 months. 61% of those customers would turn to a competitor after a negative experience. And you can sum that up by saying for every 100 deliveries, 20 customers, it could result in 20 customers turning to competitors. And as we're seeing with the increase in customer acquisition costs, some studies have recently shown an increase of more than 200% in customer acquisition costs. Losing customers due to poor delivery experiences, this churn is really starting to have a material impact on the bottom line of the marketplaces that we speak to in our supply chain. I mean, our customers are really leaving a lot of money on the table as a result of this problem, which is why we are really starting to see some quite rapid traction in how we can handle this issue. So this is where Anansi comes in. So we are an embedded insurance brokerage, and we provide parcel insurance directly to retailers. We white label our products so that we can support marketplaces and couriers and logistics services, providing that level of accountability to the customers that they're working with. And actually, given the problems that that I was just speaking about in terms of the impact on the bottom line, the reason why insurance can really have such an impact here is it provides an opportunity for insurance to do what it does best, which is essentially providing a level of accountability across the full supply chain. So, at the moment, when we speak to retailers and marketplaces, it's a bit like the Wild West. You have very variable levels of service between the different courier services. You have unregulated compensation products, which may be available in some places or may not be available elsewhere. And it's very difficult for retailers and marketplaces to provide that consistency of service. So having an insurance product which is fully regulated, which can provide that backing, is really a game changer in this marketplace. So how we partner with marketplaces in an embedded sense is that we essentially provide a white labeled product which sits in the background. This isn't visible to the consumers, so we are not embedding our insurance in the checkout function. What we're doing is we're contracting directly with the marketplaces so that we can agree maybe a certain level of cover, for example, just for high value shipments that are on international shipments. And essentially that enables them to provide that service to their customers in the background, with the insurance working in an automated way behind, and essentially guaranteeing that service. So how the product works is that we have an API connection directly into the marketplace's warehouse management system, or it could be a labeling system, for example, so that we can see all of the items, the shipments, as they leave the warehouse. We know what's being shipped, what the value of that item is. providing a lot of transparency around what is being shipped by the various courier firms. We then augment that with our own external data on tracking, on fraud patterns, on potentially on the weather patterns, and we're able to track those shipments in the background so that we can see, did the item arrive on time? Was the item delayed in any sense? Or was it damaged in transit? All of this happens in the background. If an item does not arrive, say 5 days after the expected delivery date, unlike a conventional insurance product where the business would have to file a claim and start doing a lot of the manual chasing on their side, our platform creates the loss claim in the background, so the customer can have very quick visibility that loss has been recognized by the system. And then on a monthly cycle, we then pay any claims that are due for those loss claims. If an item arrives damaged, we have a very simple method to submit the damage claims, and we already bootstrap as much of the data as we have available from when the item originally was shipped. So that makes the whole damage claim process significantly quicker than the current methodology. And what that means is that businesses then have a kind of a consistent monthly cycle where on the first of the month the premium is invoiced, and then 2 weeks later any claims that happened during that 2-week process are paid. And at any time they can have a look at the dashboard to get a real-time view of what is happening with the deliveries and what the status of the current claims is. And that's really quite a game-changing difference to the current method, which is very manual and requires a lot of paperwork. And often, we speak to retailers who have teams of people who are working on this problem in the background who could be redeployed to other tasks. So this was really the process which I was describing in the background. So essentially, once we've agreed the pricing, which is bespoke for the retailers that we work with based on whatever they're shipping, the historical loss ratio, and we can insure shipments of up to a value of €100,000. Anansi automatically insures those shipments as they leave the warehouse. We then augment with third-party tracking data, and we use a parametric trigger process. So that means we're using data around how long the item has taken to ship, what our system's expectation of the expected delivery date is, in order to create potentially a loss claim. That is all done on an automatic cycle. And then damage claims, we essentially, it's a semi-automated process. So we do require evidence in the form of photographic evidence as to when an item has arrived damaged and some explanation of what's happened. But the system also is tracking against the expected loss ratio of the item. So we have a semi-automated claims adjustment process working in the background to deliver quick decisions to our customers so that they know when claims are confirmed within 48 hours. And so that we then can make those automatic payments monthly using an open banking methodology. So essentially, the only, when the system works perfectly, the only human intervention is really with the filing of the damage claims. Everything else is handled automatically, including the payments which happen by direct debit, and also the claims payments, which are again made directly into the business's bank accounts. So now I can come on to a case study. So this is an example of a third-party logistics firm that we work with. So this is a business where they essentially do the picking and packing of the items on behalf of retailers, sending the items from warehouse to store and to the warehouse to the consumer. Our insurance product is essentially white labeled. So this logistics partner is able to essentially provide a service to deliver the items on behalf of the retailer, but also guarantee that if anything goes wrong, this is also 100% covered by the service they're providing. And that retailer then, if an item is lost or damaged in transit, will receive the full retail value of that item as part of the service. For that logistics partner, it's also a revenue stream opportunity for them. because we are able to share some of the commission that we generate from the insurance that they introduce to us through to them. So that's a benefit to the marketplace. And again, they can also provide a full accountability of the shipping experience, which in the past they weren't able to. And there was a bit of a blame game going on between their customer, the courier that they work with, and then the logistics partner that sits in the middle where the items are shipped from. And I just wanted to conclude by some quotes from our customers. So we work with, we work directly with the retailers. So Voucher is an example of a retailer we work with, a logistics partner, and also a marketplace as well that we have also partnered with. So really what I wanted to conclude to say is that the goal of insurance is really to fill a gap that we've identified in the marketplace, where there is a lack of accountability and also a massive admin burden that is sort of falls at the moment in between retailers, logistics partners, couriers, and the marketplaces that they're selling through. And the opportunity here is to have an insurance product which essentially provides that safety net to underpin and to really help to remove an area of inconsistency within those businesses. And I think I've got a bit of time actually to answer some questions, so I'm happy to take those.